One of the most exciting things about building your own privatized banking system via a specially designed life insurance contract is how many different ways you can put it to work for you. When you set it up correctly, your privatized bank becomes an and asset rather than just an or asset. So what does that mean, Kyle?
Right, like the name implies, or assets can be used for one thing, or you can use them for something else. For instance, cash in the bank. You can keep it in the bank, earning a little bit of interest, or you can use it to spend or invest. In either case, the money is working for you in one place. This is the classic definition of opportunity cost. You have to choose one opportunity over any others that might be available to you.
A properly utilized privatized banking strategy becomes an and asset through the use of policy loans because your money continues to experience uninterrupted compound growth while you're also able to use that money for other investments. In its most powerful form, you can leverage policy loans to acquire assets that generate income.
One of the easiest examples to illustrate this concept is a rental property. You can utilize a policy loan to come up with the down payment for a property, utilizing a traditional mortgage to finance the balance, or even purchase the property outright with funds from your privatized bank. The monthly income generated from renting the property will more than cover repayment of the policy loan and or the mortgage, which means you're building equity in an asset while the original pool of money in the specially designed life insurance contract remains untouched and continues to grow uninterrupted. That's a powerful concept.
It is. There are countless ways you can use this strategy to grow your wealth. It really comes down to how creative are you and what do you want to accomplish and achieve. Unlike borrowing money from a bank with a policy loan, repayment terms are flexible. This means the policyholder can use money from their privatized bank for long-term investments such as alternative investments, where they may see some income now from the investment along the way, but won't see the return of the capital for many years.
To be clear, this is not about taking on additional risk or adding additional leverage. This is simply a better way to put your money to work for you, where you have control over the process rather than giving it away to a bank. And because the vehicle to achieve all of this is a specially designed whole life insurance contract from a dividend-paying mutual insurance company, you also have the added benefit of life insurance for your heirs. Additionally, the contracts we use provide for access to a portion of the death benefit to cover costs of terminal or chronic illness while you're still alive, should you need it. That's yet another way the strategy functions as an and asset rather than an or asset.